On CARES Act, Homeowner Mortgage and Forbearance. If you are a homeowner and you have a mortgage, then this is a must-watch show. So let's get started. The CARES Act was passed in the US Congress in March due to COVID-19 scenario, and it provides relief and help to homeowners that have a mortgage. Our office has received multiple calls over last 3 weeks inquiring what it is, what is the benefit, and how it should be taken advantage of. So I'm going to summarize those calls into 5 questions and we will get started. So question number 1 is, can I not pay the mortgage? The answer is, on certain mortgage types, folks, yes, you don't have to pay the mortgage, and the lender will not foreclose on your property for not paying the mortgage. Okay. Question number 2 is, what type of mortgage qualify? Mortgages that qualify for this CARES Act falls into what is called federally backed mortgages. Now there are 5 categories or mortgage type that are federally backed. For example, if you have a mortgage that is conventional loan and backed by Fannie Mae, or conventional loan by Freddie Mac, or if you have a VA loan, or you have an FHA loan, or you have an USDA loan, then these are federally backed mortgages, which means you can take advantage of the CARES Act. Question 3 is, what should be done? There are very simple steps, folks. You need to call the lender, and you can find that information either online on your loan portal, or if you receive a paper statement, they will have a number. You can pick up the phone and call them. That is number 1. Number 2, you can ask the lender what kind of mortgage you have, and they will explain to you the type of mortgage. Is it Fannie Mae backed, or Freddie Mae, or VA loan, FHA loan, or USDA loan? Okay. Then this law gives you the right of forbearance, which means you can explain the situation to the lender, and the lender will agree to provide the forbearance. What are the benefits? It provides 2 options for you. When you make the phone call, you get an automatic 180 days in which you do not have to pay the mortgage. Okay. At the end of the first 180 days, if you are still under financial hardship, the CARES Act provides a second extension for another 180 days. In order to get the second 180 days extension, you need to once again call your lender to get the second extension. Very, very simple. You don't need anybody's help. It is just a phone call from you to your lender. Now, what happens to the loan's term? In terms of loan term, folks, the interest rate is not going to change. The lender is not going to adjust your rate. Because this program is not a mortgage forgiving program, but rather a mortgage forbearance program, which means you're delaying your mortgage however long you decide not to pay. For example, if you use the first 180 days as well as the second 180 days, that is almost like 12 months. Which means during that period, since you're not paying the mortgage, the interest will accrue on your account, and the duration for you to pay off the loan will be pushed out maybe a year or 2 years, because you're accruing the interest. In terms of loan interest rate, they are not going to change. The last question is, will my credit score be affected? Folks, your credit score will not be affected. According to the CARES Act, the lender is going to report to the credit agencies as if your mortgage is going to be current, because each lender is reporting to these 3 major credit agencies on a monthly basis. So if you have this forbearance, they will report as your mortgage being current, which means your credit score will not be affected at all. Folks, I do this show on a weekly basis. Friday, you can join me live, either facebook.com /Rocket Realty TX, or you can join me on my YouTube channel by subscribing to youtube.com /C /Rocket Realty TX. If you like this show, please like me on my Facebook channel as well as my YouTube channel by subscribing to it. Until next week, have a great week. Thanks for watching.